Yesterday, the market didn't just fall, it was disrupted. The Nifty IT crashed 5.5%, its worst single-day fall in months, as fears of AI disruptions triggered a massive sell-off in TCS, Infosys and Tech Mahindra. While the tech giants bled, Eicher Motors zoomed to a fresh record high, proving that old economy engines are still firing. The Nifty has now been rejected at 26,000 for the third time. So, are the call writers preparing for a deeper correction? Let's decode the setup for February 13th, 2026. Good morning, everyone. My name is Ajay Ka, and welcome to the smart edition of Nifty 50 Market Analysis. We are heading into Friday, February 13th, 2026. Yesterday was dominated by a brutal sector rotation out of technology. Let's recap the market for Feb 12th. Nifty 50 opened weak, failed to hold 25,900 and slid to close at 25,807, down by 147 points or 0.57%. Sensex crashed 559 points to close at 83,675. The Nifty IT plunged 5.5%, wiping out billions in market cap. Tech Mahindra 6.4% negative and Infosys 6% negative were the biggest drags. The hero for the day was Bajaj Finance, which rose 3.3%, and Shriram Finance gained 2.5%, protecting the Nifty from a 200-point fall. Let's come to the first segment, Sector Watch. AI scare versus auto power. Did IT stocks crash? It wasn't just earnings, it was an existential fear. The IT panic. Reports that the new AI agents can automate complex coding tasks triggered fears that Indian IT's revenue model is under threat. Tech Mahindra and Infosys fell over 6%. This is a sentiment-driven fall. Hedges aggressively bought puts in IT stocks. The Eicher breakout. Eicher Motors, Royal Enfield, hit a record high, closing up 2.1%. The reason was strong buying interest continued after its earning beat, with the stock defying the broader market gloom. Let's come to the second segment, FII and DII data, the institutional floor. Despite the panic, the big money didn't leave the building. Foreign institutional investors were net buyers of 108 crores in the cash market. Domestic institutional investors bought 277 crores. The selling was absorbed. Institutions are rotating money from IT to financials, not exiting the market completely. So this brings us to the third sector, the technical outlook versus strategy for tomorrow. Let's map the levels for Friday using the option chain logic. The candle, bearish engulfing. Nifty formed a bearish candle on the daily chart, confirming the rejection at 26,000. The index is now trading below its 5-day EMA, the zone 1, resistance zone or the sell zone. The levels will be 25,900 to 26,000. Call writers have aggressively built positions at 26,000 strike. They are betting that the upside is capped. Any bounce towards 25,900 is likely to be sold into by these call writers, protecting their premiums. The zone 2, the support zone or the buy zone. The levels here are 25,700 and 25,550. We saw put writers unwinding their positions at 25,800 yesterday. The next major defense line for put writers is 25,550. If the Nifty breaks 25,700, expect a slide toward 25,550 where value buying might emerge. To conclude, Friday or the 13th is usually spooky. And with IT sectors in free fall, volatility will remain high. Watch the 25,700 levels closely. If the put writers give up there, we could see a sharper correction. My name is Ajay and I'll see you on Monday with major updates that can make or break the markets. Bye-bye and take care.